Covered calls as a stock market trading strategy. David Jaffe with beststockstrategy.com, where I teach people how to trade options. Covered calls as a trading strategy. I think it's okay. It's a good way that you can add an incremental 5% or so on an annual basis to your portfolio. But the reason why I'm not a huge fan of selling covered calls is simply because I'm not a fan of owning stocks. I think that when you own stocks, it's a very capital inefficient way that does not provide you with a high probability of profit. The better way, instead of owning stocks, for example, if you want, let's say Amazon right now is trading at $15.50. Instead of just buying 100 shares of Amazon, you're much better off simply selling a 1,500 put on Amazon. That way, in the worst case scenario, you will end up owning Amazon at $1,500. And if you sold a $1,500 put on Amazon, you'd probably end up collecting around $10. So as a result, on a net basis, your acquisition price for Amazon would be $14.90 as opposed to buying Amazon in the open market and paying $60 more at $1,550. So a covered call would mean that, let's say you are long 100 shares of Amazon at a price of $15.50, and then you decided to sell one covered call contract of Amazon at a price of like $16.50. You'd probably in that situation collect around $8 of premium. And that's okay. That would then reduce your basis price of Amazon, which you bought at $15.50, down to $15.42. But in that situation, if you're trying to reduce your basis and improve your acquisition price of the underlying stock, you might as well not even own stock at all, because there's a much better way, which is to simply sell a put. So again, covered calls are decent if you're older, if you're very risk averse and you don't want to get into selling vertical credit spreads or trading naked options. Then adding adding the covered call strategy would be a great way to add around 5% annual increase in your portfolio, which I think would be great because a lot of people don't even make 5% a year. So if you're older, if you're extremely risk averse, if you don't have the determination or the discipline to learn about how to deploy options trading successfully so that you can be a successful trader, then selling covered calls would be a very easy way for you to add an incremental 5% of return to your account a year. But the fact is, and just like the example that I just gave, it really doesn't make any sense for you to own stock. There's no point for you to own stock if you want to go long stock, you can simply sell a put. If you want to go short stock, instead, you can just simply sell a call. So there really is no point. It's not advantageous. It's very capital inefficient because on a Regulation T perspective from the margin basis, the stocks will eat up 50% of your margin, whereas options will only eat up 20%. So you have much better leverage, but at the same time, leverage is a double-edged sword, so you have to be a lot more careful. But you can also have a much wider safety net. Like with the example that I gave previously, instead of buying Amazon at $15.50, like you would if you chose to go long stock, you would then sell an option with a strike price of $1,500. Or you can even decide to sell an option with a strike price at a $14.50. That way, if Amazon falls to like $14.50, you would own it at $14.50 and you would collect that premium instead of buying Amazon outright at $15.50. So covered calls, I think it's okay. It's good for older people. It's good for people who don't want to learn how to trade options successfully, and it's very easy to deploy. So if you're long 500 shares of Facebook, and Facebook right now is trading at around 133, you can sell 5 contracts, 5 calls of Facebook with a strike price of 140. That way you can probably collect around 80 cents a premium per share. So therefore, if you were long Facebook at a price of 135, then you would subtract out that 80 cents per share premium and you would be long Facebook. It would reduce your basis to $134.20. But there's a better way. If you want to learn how to trade option premium, you can go to beststockstrategy.com and enter in your email address and receive over $400 worth of free training materials. Please like, comment, share, and subscribe to this channel. If you have any questions, leave a comment below, and I appreciate your attention.